3, 2, 1. Bingo.
Alrighty.
So we're looking a little golden today. People are going to see this and go, what the heck? I don't know why. The camera decided to make us a little goldish today. I don't know if it's always golden, but you guys, if you guys see it the way we're looking at it right now, when I switch to him, it looks normal. For us, it's golden.
Flip over to me one.
And we just don't have time to like fix it.
Yeah, it's pretty normal.
I kind of like, I like looking golden.
That's fine. You need a halo.
I'd like to be golden. I don't think it'll fit over my horns. I don't think that'll work, bro.
We don't want to go down that road.
No. This is a family show.
Yeah. So speaking of family show, bro, today was a good day.
Yeah.
Busy day for me, but my daughter is at Penn State Navy ROTC. Mm-hmm. Her boyfriend is at Virginia Tech Army ROTC. And
go Army.
We luckily they both survived their first jump out of an airplane. So we took them down.
Skydived today?
Skydove this morning. Yeah.
Was it a static line or actual skydive?
Tandem.
Skydive. Tandem. Okay. Yeah.
Oh yeah. Got to start somewhere. Got to start tandem. Yeah. They had a really, really good time.
You didn't go?
Perfect day.
You didn't jump?
I chauffeured. I didn't jump.
Yeah.
I did get a little ribbing from the Army guys that were running the thing.
Bet,
but
yeah. They'd give me a lot because I ain't jumping out of an airplane ever again.
Yeah.
I mean, I don't care if there's a pillow around. The reason I can't walk today is because of jumping out of an airplane.
Yeah, these chutes were a little nicer than the ones you used to jump on.
Yeah, they are. So, they're a lot better. Yeah. But it still doesn't matter. You still hit at some force. Yeah. What do you got for us this week?
All right. Weekly update show, 23 May 2021. So we're going to go back. We talked about some of the classic guys in technical analysis. We're going to go back to really the grandfather is Charles Dow. So we're going to look at
some Dow Theory.
The Dow Theory.
This might put you to sleep, people.
I'm going to do the best I can to keep it a little bit peppy, but it very well may put you to sleep.
It is. I will say it is. So, we've both been studying on different things right now, and I did some Dow Theory study like last week, and I will say it is very interesting.
Yeah.
Like if you can just like push through the kind of, it's dry.
The glaze that goes over your eyes.
It's dry, but it's kind of cool just to realize how this stuff started.
Yeah.
Like
the 1800s was really where a lot of this stuff sort of got documented.
How the financial industry became like more organized. Like a thing, right?
So like Dow, I mean, we're going to talk about it a little bit, but what Charles Dow really did was he said, okay, we've all been trading individual stocks, right? That's been going on forever. But he sort of saw, he was the first person that I guess wrote it down that saw that if you could figure out an average of all of these,
right,
then you could sort of project forward the average
patterns,
the patterns, and you could kind of see it. And then if you could do an average, then then your odds of when you buy an individual stock, if the average is moving up, your odds of doing better in the individual security that you buy is
probabilities high.
Is higher. Yeah.
Yes.
I mean that's all these guys are trying to do is get an edge. It's like Vegas. It's what I mean? You're trying to figure out a way that gives you an edge over randomness, basically.
Yeah.
And a lot of this, came about in like the mid 1800s.
I found it interesting because when you start there, right, and that was like the early times of technical analysis, although they weren't really categorizing it as that.
Right.
He was
the beginning of it.
He and others that perpetuated Dow Theory, right? A lot of it's called Dow Theory, but he didn't really write it. Like it came from what he was saying or whatever. But I noticed that like it's funny to me though when like these long time kind of people in the industry, fundamentalist kind of people, like kind of look down on technical analysis, and I think, well, like it kind of started there. Like if you look at it, people were looking for trends, they were looking for patterns, they were looking for averages. That's how they made indexes. Like that's where it all started. Like it wasn't about like just financial ratios.
Yeah, I mean, if you think about it, right, like a market. I mean, whether it was in Amsterdam when they were selling tulips back in the 1600s, or wampum and Native Americans. I mean, it's always the same thing, right? You're trying to get what you think is the value for the trade. That's all it is, right? And so the individual trading is one thing. So if you say I build a widget and it costs me $5 and I'll sell it to you for $6 because I got to I need a salary and I got to pay my guys or whatever. That's like fundamental analysis of an individual security. But when you take the average of that industry group or a whole group of them, like a tranche in real estate or whatever.
All those people that are making that thing and selling it.
Yeah. And so some companies that make widgets do really well because of their fundamentals, their internals. Right. Some companies don't do so well, right?
Some are efficient, some are not.
Yeah, but in general, if widgets are in demand, then if you know that the trend of the general widget trend is up, then your odds of picking one of the widget companies that is going to do well goes up. If nobody wants widgets, you can be the best widget maker. And so relative to the widget trend, to the widget index, you might do really well. But relative to the overall market, you're not going to do well because nobody wants widgets, right? So the idea of the industry group trends is really a powerful thing, which we certainly know now. All right. So look at Dow Theory, and what Charles Dow used really was, which he created, was the Dow Jones Industrial Average and the Dow Jones Transportation Average. And we're going to kind of talk through that and see how and if they apply for us in TSP.
I like what you did here, man. We were talking earlier about like what we might talk about this week, and then you came out of nowhere with this.
Yeah. Well,
I like
good.
I like it.
All right.
I mean, we're first and foremost, we're an educational service. Right. And this is, if you guys glaze over this, I completely understand. However, there is some great fundamentals here that will help you, because this is fundamental, like finational theory. Yeah. Right.
This is good stuff. It really is.
It really is.
And yes, it'll put you to sleep, but it's really good stuff.
If you're a financial nerd,
I'm getting all excited about it.
If you're not a financial nerd, I don't know why you're watching us talk, because that's all we talk about anyway.
Right. Yeah. You'd be watching football or whatever. All right. And then we get to the daily charts.
Daily charts. I got to come up with a cool little tune to play when you play the daily charts to liven it up a little bit.
That would be good.
Can you get?
Nope, I can't move to the next slide.
Can you get the slide to change?
Wow, it's going to be one of those days, bro.
It is.
Okay. Pride of opinion has been responsible for the downfall of more men on Wall Street than any other. Pride of opinion. So, since Charles Dow wrote that in 1850, whatever. He can see that because he's not looking at it. He's looking at the industries and the trend of the average, because he has this thing in his mind about an average, right? But if you're an individual guy on Wall Street back then, you're looking at the securities that you trade. So he's looking at it like, okay, your opinion about the security is fine, but again, if nobody wants your widgets, your company might be the best widget company ever, and you're going to go. There's
no demand.
There's no demand. But how would you know that there's no demand in general for widgets, right? You might know that people like or don't like your company, but unless you have an average or an index of widgets, how would you know that in general people want widgets?
Right. There's a demand for those widgets.
Yeah. So I mean, he was coming at this from a different angle. So
and in context, right? I mean, we have a good example of it this past year when we had the pandemic, because a demand was created for services and like software and things that had kind of been there.
Sure.
But now just exponentially there was this huge demand for them. Yep. Peloton, Zoom, on and on and on and on. And then, as we get back to normal, those things kind of like, go back to where they kind of are, whatever. But they don't go back to where they started, right?
Yeah.
There's still a demand for them, but not as much as of a demand. And that's kind of the thing. Like Zoom wasn't a thing. We had plenty of versions of it. We had Google Meeting. We had, whatever.
FaceTime.
Whatever. We had all these versions of it, but Zoom fit that need better than most of the other things, and then, pow, it zoomed up. Yeah. Right? Yeah. So there was a demand, right? And that's kind of what he's saying is, like, if you don't recognize that those kind of meeting online software services kind of things, there was this massive demand coming, you're missing out.
Right. If you're trying to sell cars, you might be the best. Right. I mean, take away Tesla, which isn't really a car company. Yeah. So take out Tesla. Yeah. If you're trying to sell cars in an environment,
a horrible time when nobody's going anywhere, nobody's doing
driving
anything.
anywhere. You can't go anywhere. Yeah. But you could be the best car salesman selling the best car there is.
Right.
your stock's going down.
Exactly.
Yeah. So Charles Dow, born November 1851, dies in December 1902. He was an American journalist, actually, who co-founded the Dow Jones Company. And we talk about that quite a bit because people get confused between the S fund as they think is the Dow Jones Industrial Average, and it's not. It's a different average within the Dow Jones Company. But anyway, Dow Jones Company with Edward Jones and Charles Bergstresser. Dow also co-founded the Wall Street Journal, which has become one of, if not the most respected financial publication in the world. He also invented the Dow Jones Industrial Average as part of his research into market movements. And he developed a series of principles for understanding and analyzing market behavior, which later became known as Dow Theory and the groundwork for technical analysis. And I'll throw in, he also did the Dow Jones Transportation Average, which we're going to get to in a second. Okay, so what is Dow Theory? Dow Theory, it's a financial theory, okay, says that the market's in an uptrend if one of its averages, which Dow used, which he created both of these averages, the Dow Jones Industrial Average and the Dow Jones Transportation Average.
Right, in his mind at that time, that's pretty much all there was. There wasn't like tech. Right?
Correct.
That was industry. Industry
right.
was tech.
Yes.
Right?
Now think about this. Late 1800s. Right.
So all there was industry that made things.
Yep.
And transportation.
And railroad that moved things around.
Moved things somewhere else.
Yep.
Right.
Make it and take it.
That's it.
Yep. So it is very simple.
Just
as we go through
context.
this, you'll see it's very simple what he sort of created as and made it into a thing. It's obvious, but he identified the obvious.
Somebody's got to write it down the first time.
Yeah.
He did.
No, he did. So the idea is an upward trend. The market's in an upward trend if one of the averages, either industrials or transports in this case, advances above a previous important high and is accompanied or followed by a similar advance in the other average. So one average the move in one average confirms the move in the other average.
Right. Okay. One's leading, one's following.
Yes. And it's not always that transports leads industrials or vice versa, but if they're both moving in the same direction, if they're both moving up, you're in a bull market. If they're diverging, there's need for caution. If they're both moving down, you're in a bear market. So that sounds great. There's some pros and cons to that, and we're going to kind of show it on a chart, but that's the theory. Okay. 6 components to the Dow theory. So I'm just going to run. It's going to be run through pretty quick. So number one, we talk about this quite a bit. It's one of the mainstays of technical analysis, right? The market discounts everything.
And we would say now price discounts everything, right?
Yeah. Yes.
That's what it's saying the same thing.
It's saying the same thing. Yeah. So the market discounts everything. The Dow theory operates on what we now call efficient market hypothesis, which states that asset prices incorporate all available information. So earnings potential, competitive advantage, management competence, right? All these factors and everything else that acts of God and everything else that you can factor in.
All wrapped up.
It's all in the price. It all comes into the price. There are 3 primary trends, and we actually already talked about them. The markets experience a primary trend, which lasts a year or more, is the primary trend, whether it's a bull market or a bear market. Within the broader trend, the market experiences secondary trends, right? The secondary trend works against the primary trend. So if we're in a bull market and the market's going up, the secondary trend is the pullback, is the bear market within the overall bull market. And then within the secondary trend, so the secondary trend lasts like weeks to several months. And then finally there's minor trends which last less than 3 weeks that are basically noise. They're the summer volatility that we're dealing with right now, for example. Right.
And I relate that to, like, when we talk, Jerry and I talk offline a lot about crypto because a lot of people are talking about it. Yeah. And part of part of what makes it hard as a technical analyst is we don't have years of price movement, right? It hasn't been doing this long enough that we have those kind of the primary trend.
Yeah,
right. We're really but most people are looking not even at the secondary; they're looking at what was the third one?
The noise.
The noise.
Yeah,
they're looking at the noise, but you got to back up at least to the secondary trend.
Yeah, we don't really have it yet. We barely have that.
Barely have that. Yeah.
Now, at this point, trading crypto is almost like trading an individual stock that doesn't have an index to follow.
Yeah. It grew out of nowhere, IPO'd the day later, and now it's on the market.
Yeah.
It's all over the place.
Yeah.
Don't want to sidetrack us. Just trying to give context. So 3 primary kinds of markets, or primary, secondary.
Primary trends within the market, right? It's three trends. The primary trends have 3 phases, basically, right? The primary trend is the year or longer movement, whether it's up or down.
Okay.
And within there are 3 sub trends, right? Because we know when the market goes up, it doesn't go straight up for a year or more. Mm-hmm. It goes up, consolidates a little bit, which is the secondary trend, and it keeps
That's kind of what I was thinking of. There was when you said 3 kinds of markets, it was up, there's down, and there's
sideways. Really, that's it.
That's the only 3 places it can go.
Yeah. And so what the as we've talked about a million times, and he talks about it here, the key is to try to figure out whether the turning point is beginning a secondary trend within the primary, meaning a consolidation, or is it rolling over for a new primary trend to go down?
Because what we talk about when we talk about our methodology for TSP is mostly primary trend is what we're trying to forecast. We're looking for the next primary trend,
right,
which would be down or up,
right,
and being able to recognize a secondary trend, right, a correction, sideways,
right,
whatever you want to call it, recognize that that's happening and not overreact.
Right, and so that's where Elliott Wave comes in, right? Because Elliott Wave was a later addition to Dow Theory, and it was the later 1800s, early 1900s. But it was not really a clarification, but a deeper dive into what happens within that primary uptrend. And if you're in a primary uptrend, great. Now you throw darts at a board and you're more likely to hit on the upside, right? But within that, can you even make it more sort of directed?
Yep.
Okay. Okay, indices must confirm each other. So in order for the trend to be established, Dow postulates that indices or market averages must confirm each other. This means that the signals that occur on one index must match or correspond with the signals on the other. If one index, such as the Dow Jones Industrial Average, is confirming a new primary uptrend, but the other index, in this case the transports, remain in a primary downtrend, traders should not assume that a new trend has begun. Dow used 2 indices that he and his partners invented, Dow Jones Industrial Average and the Dow Jones Transportation Average, on the assumption that if business conditions were in effect healthy, as a rise in the industrials might suggest, the railroads would be profiting from moving freight, right, as the business activity required. So if asset prices were rising, but the railroads were suffering, then the trend wouldn't be sustainable, right? You make it and you take it. If they're both moving in the same direction, people are buying, stuff's getting bought and sold, new stuff's getting built and moved. If transports are rolling over, there's a problem.
Nothing's moving.
I mean, this is the chart of the stock of the companies in the transport index, right? Mm-hmm. So we're not saying that in the economy things aren't moving. It's just that if the stocks there are 20 stocks in the Dow Jones Transportation Index. If those companies' stocks are rolling over, even though the industrial prices keep going up, something's amiss. Mm-hmm. That's really all it's indicating. The transports could come down and then pull back up with the industrials and keep going higher. But while the divergence is there, there's room for caution, basically. So the converse also applies. If railroads are profiting, but the market, the industrials, is in a downtrend, or a downturn, then there's no clear trend between the two of them. And the fifth one is volume. We talk about that all the time. Volume should increase if price is moving in the direction of the primary trend and decrease if it's moving against the primary trend. So like we talk about, we want to see volume increasing as price increases. When prices decrease, if volume is decreasing as the price decreases, it's almost definitely a consolidation as opposed to a rollover and a crash. When volume picks up as prices go down, now you get a problem.
Yep.
Yeah, it doesn't. The theory is all great. It doesn't help us on days that are like, oh my God, I just lost $5,000 in my TSP account. This is not that. This is like big picture, like
months.
Yeah, well, I mean,
at the smallest version, probably months. Definitely not weeks and days.
No, definitely not days.
Definitely not days.
Last one, critically important. The trend persists until a clear reversal occurs, which goes to what we were just saying. There's going to be noise and volatility day to day and week to week, but if you can identify the major top, and in this case the industrials hit a major top, the transports are going along with it. If one rolls over and one keeps moving, now you're suspect. Maybe now you go to 50G, 50C or whatever, something like that. But it's suspect, right? And it doesn't happen on a daily basis. It happens over weeks and months. So until a clear reversal is confirmed, you stay in the trade. And the downside of that is this. So people knock the Dow Theory, and here's why. You put in, all right, you put in some kind of a low, right? The market comes up, comes in, so you have a higher low, right? Keeps going, you have a higher high versus this one, that's all good. Once you have a higher high, which this is higher than this one, the new uptrend began, right? So the problem with that is, here's the bottom. And now I got to wait. The market comes up, comes down and tests, and comes up and has to get above this high before I buy back in based on the Dow Theory. Right? I did not get all this. Mm-hmm. I'm gonna get all this, mm-hmm. but I did not get this. And a lot of times, this is the biggest move off the bottom, and that's everybody's sort of downside to the Dow Theory, and it's absolutely true. It's not designed to catch the bottom, mm-hmm. and it's at the same time it's not designed to catch the top. So the market keeps going. You get higher highs.
It's designed to catch the trend.
It's designed to catch the overall trend, right?
Not ups and downs.
Right. So it's the same thing on the downside. You're in the market. You got a higher high. You have a higher high here. You have a low. Now you have this. I don't know why they don't put it in the picture, but this is a lower high. Right?
They didn't do LH.
Yeah, they do LH on that one. Once you get below the prior low,
the trend has changed.
The trend has changed. But you definitely did not catch the top, right? And that's everybody's gripe. Because you're up here and you're like, okay, I got $1 million. I'm a TSP millionaire. And now I'm waiting until I'm down here to get out. Maybe I lost $100,000 in there. I'm not going to lose any more.
Right.
So I'm not saying the Dow Theory that you should use it to trade your TSP.
Yeah, but it's a basis.
It's a basis, right?
It's fundamentals.
This is the basis of technical analysis.
This is dribbling.
Yeah,
okay?
basically, yeah.
Yeah, you have to start somewhere.
Yeah.
And this is like the smallest or the lowest kind of fundamental thing to start wrapping your head around.
Right.
Where we get into all Elliott wave is just a bigger expression of that theory, right?
Yep.
It just digs in. It goes in patterns within patterns within patterns.
Yep.
And that's where you're able to kind of figure out the trend, the probability of the trend faster.
Yes, the trends within the trends and all that, which, we complain about only having 2 moves a month in TSP, but really, if you can if you can utilize those effectively, you can trade, because if the primary pattern is a year or more long, you want to be able to trade within that year.
Yep, that's our plan anyway.
Yeah,
not to trade within the day.
Right. No, definitely not. Okay, so Dow Jones Industrial Average. It's 30 large publicly owned blue chip companies that trade in the U.S. Right, that trades either on the New York Stock Exchange or on the Nasdaq. Was named after Charles Dow. Created the index in 1896 along with his business partner Edward Jones. These names are unbelievable, right? Edward Jones and Dow Jones, and just kind of amazing.
It is.
So the Dow Jones Industrial Average is actually the second oldest U.S. market index. The oldest, which Charles Dow created, is the Transportation Average. And that actually was, he created the Transportation Average first, but it was designed to confirm the industrials. So what does the industrials look like right now? Here's 10 years monthly of the Dow Jones Industrial Average. Kind of like the C fund, you can see over the last 10 years. Actually, this is not 10 years. This is 20 years. Over the last 20 years, you had the big crash here from 7 to 9. We get the coronavirus crash here, and we get this huge move higher in industrials. And actually, we've been talking about it for the last couple of months. Industrials has continued higher while tech has rolled over. So I should have put a chart in next of tech, but I didn't do it. But right now, the S fund, as we know, is kind of doing like that while the industrials are continuing higher. So there's definitely a divergence going on there. We're approaching an overbought on a monthly basis in relative strength on the industrials. And you can kind of see it there. Volume is decreasing as price is increasing. So one of the rules is that volume is supposed to confirm the price movement. So it's kind of suspect. Having said that, the sixth rule of the Dow Theory is that you stay in the trade until a change in the trend is confirmed. And obviously, there's no change in the trend. It's rocketing straight up. So the transport average, Dow Jones Transportation Average, sometimes known as the Dow Transports, it's what everybody calls it. It's a price-weighted average of 20 transportation stocks in the U.S. Back in the day, it was mostly railroad. Now it's United Airlines, American Airlines, all the railroad companies now. Some of the rental car companies, it's transportation, but the idea is still the same. If you follow the transport index, if transports are moving goods and services prices are going up, then the economy is doing well. So transports have actually been outperforming. You can see the relative angle of transports since the COVID crash is even more straight up than the industrials. It's kind of unbelievable. We are definitely at an overbought relative strength in transports. Not to say that means that we're going to roll over anytime soon, because as you can see, you can stay overbought for years at a time. But coming off an up angle like this is pretty unbelievable. I mean, what goes up fast usually comes down fast. So we shall see. This is basically how you use it, though. You got the Dow Jones Industrial Average is the candlesticks, and behind that is the transport average, which is the black line. So I plotted them together so you can kind of get an idea of the divergence. So like right here in this part, you got back in 07, we had the price of the industrials continuing higher as the price of the transports rolled over. All right, let me just zoom in on that a little bit. So in 2007, you got the industrials, which are the candlesticks, right, the red and black line. The price is continuing higher, but the transport average rolled over. So now you've got some concern, because back in 06 and early 07, they were moving together and they were both moving higher. Once they diverged, it was a leading indicator to what happened in 2008. So the transports never made a new high. Let me back out of this. It's kind of hard to see, but you got the high right there in the transports, and then you have a high right there. It never made the new high. Hit here, you had a double top there in transports, and it rolled over. So right here, when transports did its first rollover, it was the leading indicator of what came later in late 2007, early 2008. And then we had the same thing up here in 2014, 2015. You get the transports hitting a pretty nice high, but then rolling over. And you still had industrials moving higher. So again, the transports were leading, and then industrials rolled over along with them. Same kind of thing here in 2019 into 2020. You got the industrials moving higher, and the transports not making any headway. So did that sort of foretell what happened in coronavirus? No, not at all. But not at all meaning coronavirus, but there was already a divergence going on in here. So now at the bottom of coronavirus, you got the industrials and the transports in lockstep moving higher. So we are absolutely, from a Dow Theory perspective, absolutely in a confirmed uptrend, and we have been for quite a while. So one of the other reasons why I wanted to put up this chart is because of this, and they both have it on a monthly basis. You can't actually see it very well, but the candlestick, it's black, right? Which means it opened at the beginning of the month at the bottom, went up above 1600 and came all the way back down. So a huge monthly reversal like that is generally a very bearish thing. And monthly charts are much more important than weekly and more important than daily. So hopefully by the end of the month, which we only have another week or so left, we can get a little bit higher on the transports. But if the transports roll over at this point, and the industrials keep moving higher, it'll be an area of concern.
Yeah, it's an indicator.
Yeah,
like many other things, right? We want to just keep an eye on it.
Yeah, it doesn't mean that the trend changed.
Right.
In fact, it's exactly what he's saying, right? The trend hasn't changed until both of them are moving in the same direction.
Yep.
So
we have to wait for confirmation.
Yeah. Now I don't wait. I mean, I understand the Dow Theory and all that. I'm much more Elliott Wave than Dow Theory, because if we waited for confirmation, we could take a 20% hit.
Yeah.
Before it actually confirms, and I that's not something that.
Yeah, and I think if Elliott Wave had existed when Dow was alive,
right,
he would have been all over it.
Oh, for sure.
Yeah.
I mean, Dow was the grandfather. If Elliott Elliott was the father, Dow was the grandfather.
Yeah, absolutely.
All right. Anything else about Elliott Wave?
Or Dow Theory?
Yeah, sorry, Dow Theory.
Him too,
Dow or Elliott, whichever.
We haven't even gotten into Elliott Wave yet.
It's been a while. We're not doing Elliott Wave today.
I don't think we can do that in the show. No, I think we got it. I mean, the takeaway is, and hopefully people didn't fall asleep during all that.
Yeah.
Because I know it's not as exciting as talking about Peloton or
we didn't do
other
Peloton
charts.
today.
You didn't have a bonus chart this week.
No bonus chart.
But understanding these fundamentals, at least from our perspective, if you understand these fundamentals of Dow theory, then you're going to understand what we're doing better.
Yeah, right. Absolutely.
The methodology, I kid Jerry a lot that, like, you know, he set up this system that works for him, right? But what we've realized is it really works for a lot of people. But at the end of the day, it's based on fundamentals, right? It's not as much Jerry's method.
I didn't make this stuff up.
Right. What
I
you
applied
did,
it to TSP.
You found a combination of tools that makes you feel comfortable.
Yeah.
And you sleep well at night doing them. And that's all anybody has to do, right? Any of you folks listening to this, you have to find, if you want to be an active investor, if you want to be a passive investor, that's different. If you want to be an active investor, regardless of whether they're talking about a TSP, an IRA, or brokerage accounts or anything, you have to decide what your tool set is, right? What you understand. And if you're going to go in that direction, you're going to start with Dow theory, whether you know it or not.
Right. It doesn't really matter which technical indicator
you can be all into Bollinger Bands or Elliott Wave or whatever. You really started with Dow theory because that's what all that stuff was built on, was that, there's patterns.
Right.
There's trends. If you do averages and indexes, these things are good. So, hopefully you guys, if you did glaze over, go back and watch it. But it's good stuff.
Yeah, good stuff. All right. So what happened this week?
Bum, bum, bum. I'm going to come up with some
this
music.
week wasn't too bad.
I'm going to come up with some music
We need
for
some
this.
music for this, yeah. So the TSP stock funds, 6-month daily charts. What do we got this week? It's definitely a consolidation week. We put in an all-time high in the C fund back earlier in May. Since then, we took a bit of a hit through the 10-day down to the 50-day, and we've been consolidating along the 50-day ever since. So not ideally, what I would like to see, along with everybody else, is that the 50-day moving average line holds and prices move higher from there. That's what everybody wants to see. It's held the 50-day more or less every time for the past 6 months at least. A lot of times, not always, but a lot of times when you have one leg down and you have some consolidation, you tend to get a second leg down. That happened in 2018. I don't have that on the chart right now, but that happened in 2018. So any daily close below the 50-day moving average, below that blue line, I would expect to see another leg lower from there. Doesn't have to be a huge leg lower, but I would expect to see another leg lower from there. So as long as price can stay above the 10-day moving average, the red line, we're good to go. And that's where we are right now. We're still above the 10-day moving average line. So until we get below the 50, I'm not worried about it. S Fund has definitely been underperforming. It's tried to pick up in the last couple of days. It got above its 10-day moving average line, the red line, but hit resistance on Friday at the 50-day. So we'll see what happens. Going forward on the S Fund, you need to see two things. Price has to get above the blue line and stay there, which will allow the red line to come up and cross through. So that cross of the 10-day back up through the 50-day will pretty much be confirmation that we're back up on a new uptrend. Until we get that, the S Fund is definitely suspect. The MACD looks pretty good. It looks like we're about to cross positive on the MACD. The relative strength is angling up, right? So everything, on a daily basis looks pretty good. So we'll see. It would have been great if we had closed above the 50-day moving average today, but we didn't. iFund, it's in its channel. Like, there's really not that much to talk about. It's riding that 50-day moving average line, and it's in that channel. So as long, like the 10-day right now is kind of useless for the iFund because it's oscillating back and forth along that 10-day. So it becomes not useful for us as a trading tool. The 50-day is very useful because every time it hits the 50-day, and it hits it a lot, every time it hits it, it bounces higher off it. So as long as we keep getting that, we're good. Unfortunately, that means we're going to have to absorb, 78 basically to 80 to, say, 83. So a 5-point move. So expect to have to absorb a 5-point move in volatility going forward, which means, these moves could be up to 5 points as the 50-day continues. And 5 points is on if you're looking at the dollar value of your account, it's quite a bit of money. But if you want to stay in the trend, which is going up, you have to accept basically 5 points worth of volatility. F fund, we talk about it. It's not really worth. It's not worth being in terms of the chart right now, and it's not worth being in generally anyway. It's consolidating kind of like the stock funds are. It's above the 50-day. Fighting for support there at its 10-day, and we'll see what happens. MACD is turning positive. Relative strength actually is turning positive, at least on a daily basis also. So on the F fund, if you're in the F fund, your first bottom line is that low right there. Anything below that is a serious problem. Your final bottom line is that one. Anything below that close is a serious problem. And it's going to come down to inflation concerns. So the F fund has been consolidating here in the last few weeks, but as inflation raises its head in the news more, the F fund will come into play a lot more. Last thing I wanted to say about all this is that the summer is volatile, and we are. Let's see. Let me go back to this one more. Here's the I fund. We're almost at all-time highs, right? There's the C fund. We're almost at all-time highs. If you're watching the show, if you're this far into it, an hour or wherever we are into it, and you're saying, you know what, I love you guys, I love all this stuff, but I keep hearing you say the summer is volatile and all that. I'm just going to the G fund and I'm going to the beach. Nothing wrong with that.
Amen.
Yep, absolutely nothing wrong with that. I mean, we're within a couple of % of the all-time high on the stock funds. I mean, and if you go to the G fund and come back in September and look at it again, you'll have whatever you had at the all-time high. You're going to have a little bit more because you'll be in the G fund.
Right.
I mean, I know people hate the G fund,
and you got to get over the FOMO, the fear of missing out. Right. There may be more to come in the uptrend, but if you don't want to watch the show and watch the market and do the thing and be active,
right.
If you want to go on vacation for 2 weeks, park it in the G fund, take a break, enjoy yourself. Don't come back to find out it rolled over.
Right. No. I wouldn't roll the dice like that.
No,
absolutely
because
not.
All-time high means it might not be going higher, right? Now's the time to be thinking, G fund sounds pretty nice, and we will see people on Facebook ripping that apart. About all these reasons, and like, you know what, we play it conservatively, and we are very proud of that because we would much rather have a slow, steady trend up in my account than this.
And I want to be able to go to the beach,
and not worry
and
about
not look at the market. Personally, unfortunately, I can't do that.
Right. Because we do it for a lot of people.
I mean, I don't have the luxury of turning off my computer and going to the beach.
You don't get to go to the beach unless you watch the market.
And I do.
Yeah, you do it anyway.
I go to the beach and I watch the market. So
yeah, it's your guilty pleasure anyway.
Yeah, it is.
All right, questions. We're not at the slide. There it is.
There you go.
All right, if you have questions, as usual, put them in the comment section on Facebook, on YouTube, wherever you find this thing. And I will say, until we went off on that you covered the Dow Theory and all the weekly charts, and we were still at like 42 minutes.
That's pretty good.
That's amazing.
Yeah, it's pretty
so
good.
We're not going to make this any longer by going off on some tangent.
Yeah. No.
I actually have to get to a lacrosse game. My daughter's playing, and we got the whole family there to watch. So I'm out of here. Hope you guys had a great weekend, and hope you have a great week coming up. If you like the show, please pass it on to your friends, share it, give us some feedback, let us know what we're missing if you want to find out something else. If you say, please don't ever talk about Dow Theory again.
Yeah, we won't. Oh, last of the last. I'm still training. I got 2 weeks left to train for this race.
Oh, the swim.
The swim, yeah, the Boston Frogman swim. If you're still watching the video, because I'm gonna do a little thing about it next week, because then I'll be 1 week out. But it's a 3-mile swim around Boston Harbor. It's a great cause.
So the Navy SEAL Foundation.
Navy SEAL Foundation, yep.
Yeah, and so part of it is if you're swimming in it, you got to raise some money.
Yep.
So if you guys feel so inclined, there'll be a link in the show notes or in the show. Take a time to go there and give a couple shekels.
Yep. Throw a couple shekels to you can laugh at the thought of me in 52-degree water.
I just wish I was going to be there to video it.
Yeah.
Because we'd put it in the show.
Oh, yeah.
I'm not going to be there. Sorry, guys.
I don't blame. Army don't swim. I get that.
Don't swim, man. I don't even jump out of airplanes anymore.
All right.
And on that,
peace.
We're out of here.